This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, now let's take a look at the gold market. So the bounce down that we have discussed yesterday has happened. So that was really significant resistance around 1315 area. That is the weekly pivot resistance one, and agreement by Judnapoli framework is the combination of the ABCD target and Fib resistance that accompanied by the Fib resistance that creates the stronger resistance area. So market has moved down, and our major task in the current situation on the gold market, as we also have discussed yesterday, is to see how market will respond on the support area on the intraday charts, because if market will stop somewhere in a reasonable support area, it will keep the chances of possible upward continuation. But if it will fail and continue move down, that could be the indication of the possible Gartley's triple to sell, thrust down, ABCD retracement, downward continuation the first time. But in the larger perspective, that could lead to the downward acceleration with the monthly bearish stop grabber pattern that could lead market right to the 1170s area. Okay, that's why depending on how market will behave and how it will respect on the intraday Fib supports, this will be the key for the short-term price behavior on the gold market. But this significant recent plunge down leaves not much chances on the immediate reversal to the upside, because this action to the downside, as you will see on the intraday charts, was really fast and strong, and even by some rest of the momentum in this thrust down, we probably should expect some deeper continuation. We will see, maybe European Central Bank statement and comments will impact on the current situation, but that's really a fast action for intraday charts. What in the short-term perspective, what we could get here, here we could get, for example, ABCD down. Here we could get some kind of the rising falling wedge pattern. That is what we could get within the nearest 1 or 2 weeks. But right now we are mostly interested in what price action market shows on the intraday charts. As you can see, trend still is bullish, and what is more interesting is that today, tomorrow, we should watch for flirting of the price with the MACD predictor line. So if we will get here the bullish grabber, well, that will increase chances, at least will give us the pattern that at least suggests the possible upward action, and that will be something, at least something that will point on a possible bullish development, and that will point that market still has some chances on the possible upward action. So let's see what we have on the intraday charts. On the 4-hour time frame chart, I said that I prefer to see that market will stop the retracement down somewhere around 1290 area, because that is the 618 support. That is the combination of the weekly and monthly pivot points. So market almost has done this, but it has done this already below the pivot points, and that is not good sign, especially if market will hold below these areas, and especially if it will hold below the monthly pivot point. That could be the indication of the shifting sentiment on the bearish side, since market only has reached the weekly pivot resistance one, and we know that weekly pivot resistance one holds the retracement, upward retracement in the longer term bear trend. And now we see this behavior. So market has hit the weekly pivot resistance one, shows the retracement, and turned again below the monthly pivot point. That points on the possible bearish sentiment. But we need to see that market really will hold below this area. Currently, as you can see, market stands at the support and showing something that looks like the bearish flag pattern here on the 4-hour time frame chart. Trend holds bearish, of course, here. Well, what we could get right now on the hourly time frame chart, guys, theoretically we have the shape of the double repo buy, but the shape of this bottom, the bottoms of the double repo doesn't look attractive. That's not the capitulation of the bears. What's the core of the double repo pattern? The double repo pattern, the core of this pattern is the failure of supporters of the previous tendency to push market in the direction of this tendency. That is the core double repo pattern. So, for example, if that was the bearish trend, market starts retracement, new bearish positions have been opened here, but market has failed to push market lower. And that leads to reversal, grabbing the stops, and opposite direction action. That is the core of the double repo. But here, we do not see any this struggle between the bulls and capitulation of the bears. This mostly looks like the retracement of the thrust down due to the support areas, some sort of the ABCD action, although by the shape it looks like the double repo. Okay, so here it mostly looks like some kind of the ABCD, because we do not see that market here has tried to push market lower. That's just a retracement and BC leg of the retracement and short-term some, as you can see, correction, as you could say. Well, that's why I can't call you to trade this on the long side of the market, although maybe market could show some retracement, reasonable retracement here after such plunge down. Traders could start to take the short-term profit that they have got after this significant plunge and at the eve of the European Central Bank meeting. That's possible, but the shape and the market mechanics and how market, when based on the behavior that market shows here, I wouldn't treat it as the double repo pattern. It's a bit too flat for treating it as the double repo. Mostly it looks like the flag pattern. And guys, to be honest, I suspect that market still will show the downward action, although it hasn't passed yet through these supports. But the strength of this action and the fact that market has moved below both of the pivot points, well, makes me suggest that probably we will get some downward continuation. In such kind of the situation when the market has significant momentum on the downside, personally I wouldn't take the bet on the possible upward action. And here, guys, I wouldn't treat it, as I said, as the possible double repo. So I think that we should wait a bit and see what will happen on the European Central Bank statement, in the comments. And tomorrow we will discuss what we could expect from the gold market in the near future, because if market will not hold at these levels and will pass through the weekly pivot support one, as you can see, that's really close to the current market, that will be a very significant challenge and significantly increase the chances on the downward continuation on the daily time frame chart, maybe with this ABCD pattern to the downside. Not what we could expect. In this case, the target will be approximately 1255, 1250 area. So really significant, $40 per contract, not small action. Well, but let's do not run ahead of the train. So let's see what will happen. Currently, market stands in the tight retracement of the significant support area, but the shape of this retracement is on the 4-hour time frame chart and is on the hourly time frame chart doesn't let us to suggest on any significant bounce out from it, at least currently. Let's see what will happen during the Mario Draghi speech.